Since their inception, Celsius Network, FTX, and Crypto.com were promoted as revolutionary platforms that will change the landscape of cryptocurrency trading. Backed by an established company, the Celsius Network has proven its ability to generate large returns for investors and has raised millions in funding through private investors, venture capital firms, and family offices. But, has the team overpromised on the capability of their platform, and should investors be concerned? Let's find out in this video if Crypto.com is on the brink to be the next failure, and don't forget to keep up for the exciting bonus fact at the end of this video. FTX collapse in start of November is a tragedy and total failure of governance, stated as a blunt claim by Blockchain.com CEO and co-founder Peter Smith in his conversation with CNBC. He defined this fail as a closing bell, but it's not going to sink the crypto economy by any stretch. As a quick reminder, the FTX token swap was planned as a way to give stakeholders two tokens, a proof-of-stake-based currency called Terra and a proof-of-work-based currency called Origo. The coin swap was scheduled to launch on August 20th, but was delayed after regulators in the US and South Korea declared its security. According to Smith, the rapid downfall of Sam Bankman-Fried's company will accelerate a trend back towards regulated crypto institutions, as well as a shift back towards individuals holding crypto assets on their own private keys. For Smith and his team at Blockchain.com, this represents an opportunity to dominate the market and grow the company. Many professionals believe that Binance's decision to bail out a rival cryptocurrency exchange from bankruptcy proves that no one is safe from the chill of crypto winter. Until this November, FTX ranked number 4 among the largest exchanges per CoinMarketCap's measure of the volume of daily trading activity in terms of dollars. CEO Sam Bankman-Fried was a familiar face in Washington, D.C., having spoken before Congress and contributed millions to various political causes. Not only FTX, but all digital asset holders were impacted by the market-wide decline in value. Bankman-Fried told CNBC, acknowledging the problem, and told he thinks they were exempt from it. Binance made an offer to acquire his company earlier this month, after experiencing a liquidity restriction. However, the terms of the deal were not made public. Pascal Gauthier, CEO of a company that produces cryptocurrency wallets, said that this demonstrates that no one is too large to fail. The FTX server didn't appear to be vulnerable to the assault. During the 2007 to 2008 global financial crisis, the term "too big to fail" gained currency to describe regulators' decision that certain banks could not fail without posing a systemic risk to the entire economy. Following the 2008 financial crisis and the failure of Lehman Brothers, the federal government extended aid to a wide range of financial institutions. In the cryptosphere, especially, a lot may change in a day. Bankman-Fried used since deleted tweets on Monday to allay worries that his crypto trading empire would go under. Bankman-Fried had stated that FTX is good, and that the exchange has sufficient assets to protect clients' holdings should they decide to withdraw their money from the platform. His remarks followed news that Bankman-Fried's trading company, Alameda Research, had $14.6 billion in assets versus $8 billion in liabilities. Reportedly, the majority of its assets were held in FTT, FTX's native coin. Subsequently, the value of FTT fell. The 32-year-old businessman, who had positioned himself as a lender of last resort in the faltering cryptocurrency industry, made the announcement that he would sell the exchange he co-founded 3 years earlier to Binance, the largest cryptocurrency exchange in the world, the following day. The fiasco brings to light a concern that economists have long raised regarding cryptocurrency. Despite the fact that the industry may be worth billions of dollars, it was recently estimated to be worth $3 trillion by CoinGecko. In practice, it is not yet systemic enough for authorities to feel the need to step in if a business fails. Additionally, unlike the tightly regulated banking sector, cryptocurrency is not yet subject to laws in the United States or other large nations, though this is anticipated to change as soon as governments like the European Union introduce new regulations. Not only FTX, but other businesses are also likely to experience financial challenges in the future. For starters, that wasn't FTX. Due to the decline in value of Terra and Luna tokens, cryptocurrency lending company Celsius filed for bankruptcy earlier this year. The collapse of cryptocurrency fund manager Three Arrows Capital and broker Voyager Digital showed how many parties were indebted to each other. At the present time, all the coins that Crypto.com or FTX issued are circulating on the market or held by the exchange, and it still has $300 million in cash reserves. It is yet to be determined how successful the community will be in getting the project to relaunch the Bittrex service. Both Bittrex and Binance have stated that they will comply with securities regulations under US law and will have to get the blessing of the Securities and Exchange Commission before they can list any new token. Some supporters of FTX believe that all is not lost and that the exchange will survive in some form or another. But is the project doomed to fail? Can it really be successful when a majority of token holders didn't agree with the decision? Crypto.com was founded in Hong Kong but now operates out of Singapore with offices in the UK and the US. The company has received significant investment from venture capitalists in China and Japan and has plans to expand into the mainland. Investors in Crypto.com include Huobi Capital, Matrix Partners China, Ciyuan Ventures, FBG Capital, Draper Dragon, Block VC, DCG and others. If the company manages to relaunch the exchange and generate some revenue, it could use this money to fund further expansion into more markets in Asia and other parts of the world. It will be interesting to see if the company is able to recover from the current setback or if it's going to be brought down by the failure of the project. The decision on whether to launch the new platform or not remains up in the air. There is currently no clear time frame for when the relaunch will take place or what will ultimately happen to the token holders. Will the recent fiasco cause investors to abandon the platform altogether, or are they willing to wait it out until the platform is up and running again? The answer to that question remains to be seen, but it is certainly going to be an interesting case study to follow in the coming months. If the Bittrex launch fails, it could lead to a loss of investor confidence and may even damage the reputation of the company as a whole. If you are still watching, as announced, here is a bonus fact. To some investors, the next crypto player to be tested by the market sell-off is Solana, a blockchain platform that competes with Ethereum. The Sol cryptocurrency dropped by more than 30% on Wednesday as investors fretted over Solana's alleged connections to Alameda Research. CoinDesk estimates the value of Alameda's Sol holdings at around $1 billion. Do you think Crypto.com or any other crypto exchange out there may be the next Celsius Network or FTX failure? Share your thoughts in the comments section below. Celsius Network and FTX are two very promising projects, but there is always a risk that they could fail. If I ask the same question a month from now, you could probably answer it with a completely different answer. The only way you can truly know the future of these projects is by getting involved. By investing in the ICO of one of these projects now, you could not only get your money back but also potentially earn much more in the future if the project succeeds. Make sure you do your due diligence before investing any of your own money in any ICOs. And to stay updated about the latest financial and economical news, don't forget to subscribe. See you soon.